If you happen to be a dividend investor like myself, I'm almost certain you have considered selling everything you currently own in the stock market and putting all that capital to work into JEPI ETF. Now, the JEPI ETF does have a lot to offer, but might not be the best and final investment out there. But stay tuned because we are going to find out exactly how many shares of JEPI you would need to completely live off of JEPI dividends. If you're not familiar, JEPI, ticker symbol JEPI, is a JP Morgan Equity Premium Income ETF. It's an exchange-traded fund that invests in a diversified portfolio of U.S. equities, and on top of that, rates cover call options on those equities to generate even more income. The ETF's objective is to provide investors with exposure to U.S. large-cap equities while also generating consistent income. The fund's portfolio is constructed using a rule-based methodology that selects 20 to 40 stocks from the S&P 500 index based on a combination of factors such as growth, quality, and value. The fund then writes cover call options on a portion of the portfolio to generate income. The cover call option is a strategy where investors sell call options on a security they already own. So just to be clear, selling options is not the same as buying options. By using cover call options, JEPI ETF aims to provide investors with a high level of income, more so than they would receive from many other stocks or even other ETFs. However, the strategy also comes with some potential drawbacks, such as reduced upside potential and the possibility of missing out on gains. But JP Morgan's premium income ETF, known as JEPI, is quite popular. You see, it currently has somewhere of around $20.66 billion in AUM, or assets under management. The average trading volume on the fund is decently high, and the expense ratio is only 0.35%, which isn't horrible. What's also pretty crazy is that if you stack up JEPI next to the S&P 500 and look at the last 5 years as far as total return goes, so this is dividends included, JEPI's total return was 41.41%, S&P 500 was 67.33%. Now, I know what some of you guys are saying. You're saying, well, if the S&P 500 did better, then why not just invest into that? Obviously, every investment has their own pros and cons, but JEPI pays out every single month, and some investors don't want to wait that long to cash in on their money. So JEPI is definitely a good option for those out there that want their money every single month. If we were to find out exactly how many shares of JEPI we would need to cover all of our expenses, we would first look to Value Penguin, which says that the average household spends around $5,111 per month on average. The largest expense for most Americans is housing. At $10.50 per month, the cost of having a roof over our heads accounts for more than 20% of a household's monthly budget. So now that we know that the average expenses for a household is right around $5,100, we're going to have to see how much one share of JEPI pays out per month. Now, this could be a little bit difficult to find out because JEPI does not pay the same exact amount every single month. The monthly distributions change and rely on a multitude of factors. But on average, you could consider JEPI to be one to pay out around 50 cents more or less per share per month. So the way the math would have to work then, if we need to come up with $5,100 per month, and each share of JEPI pays us more or less 50 cents per share per month, we would need to come up with 10,200 shares of JEPI in order to cover an entire household's expenses every single month. And at the current price of JEPI at $55 per share, that would equal $561,000 invested into JEPI in order to cover an entire household's expenses for the entire year. But I want to hear from you guys. Comment down below if you own shares of JEPI and if you're a fan of it. And if you like videos like this, make sure to like this video and subscribe for more.